Hello, everyone. My name is SaCola Lair, and welcome to Real Estate #Real Talk. Again, my name is SaCola Lair of SaCola Lair Real Estate, powered by eXp Realty, and I cover the Mebane, North Carolina area all the way to the Triad to Kernersville, North Carolina. And I'm joined today by my accountability partner, my unofficial mentor who has over 17 years of real estate experience, Connie Ward. Welcome, Connie.
Thank you, SaCola. Hello, everyone. I'm Connie Ward with Connie Ward Realty, powered by eXp. I'm located in the Charlotte metropolitan area, and I service Mecklenburg County, Gaston County, Cabarrus County, and all of the other small towns surrounding Charlotte. Welcome to Real Talk today.
All right, so today our topic is one of the most important, especially for first-time home buyers or even people who have been out of the real estate market for years. So it doesn't matter whether you are a current homeowner or a first-time home buyer, we are going to cover the 10 commandments of what you should not do when you are applying or underwriting a real estate loan. Right, Connie?
Exactly. And today we're going to go over those 10 commandments with you.
Okay, so here's our first commandment of what you should not do. Take it away, Connie.
You should not buy a car, truck, or van during this process. Okay, so I know life happens. Your car may break down. It may be at the end of its life right now, and you know that you're in need of a new vehicle, but you really want to wait. So a key point to remember is if it requires a social security number, you definitely want to avoid that interaction. Don't give out your social security number. You don't want any credit inquiries during this time. So just hold off. And once you get those keys in your hand, then you can go car shopping. But really, guys, you just want to wait because it can turn an approval into a denial. And we don't want that to happen.
No, not at all. That's a good one. I like that one, Connie.
Yeah. And so what else should you not do during this process, SaCola?
Let's see. So I think you should not change jobs, become self-employed, or quit your job. Now, look, we all have dreams, goals, and aspirations of things that we want to do. And we may get excited because we're actually achieving goals. We're purchasing a home, or we're upgrading, or even downgrading. It just all depends on your personal lifestyle. But the last thing that you want to do is change anything that has helped you get pre-approved for a loan to begin with. And the reason why we say don't change it in midstream is because during the underwriting process, if you are getting a mortgage loan, then the last thing you want to do is change, because they will check and verify your employment at the very near end of underwriting. And that's just their final seal of stamp of approval to say, okay, this person is good for this loan. And that takes you to the settlement table. So please, whatever you do, don't change things in midstream. Don't quit your day job or whatever main revenue streams of income you have coming in. Don't change it. Wait again to after you get those keys in your hand to sign those papers.
All very right. Important. Very important fact to remember.
Important. Okay, Connie. You should not, we on the third one, you should not do what?
You should not spend any money set aside for closing.
Oh, that's a good one.
Okay, so what does that really mean? It means leave your bank account alone during this time. So don't go dipping and dabbing into your checking or savings account during this time. And most certainly don't spend the money you have set aside for closing or for your down payment. So let's just say hypothetically, someone comes to you with an emergency. They need to borrow some money and they promise they're going to pay it back in a couple of weeks. Unfortunately, during this time, you're going to have to say no, guys. So you're going to have to tell that person that I'm in the process of buying a home and I can't make any large withdrawals out of my banking accounts during this time, or else I could be denied my loan. So you definitely want to hold on to all of your money that you have on reserve, your savings, And whether it's for your down payment or money that you'll be paying towards your closing costs, you want to keep that money safe. And what happens if they don't pay the money back? And then, you will have to set your dream aside to buying your home because you've loaned out this money or you've spent it. So you definitely don't want to touch the money.
I feel like an Uncle Joe in a Medea movie. Don't do it. Just don't do it.
Nope.
That was a good one. I like that one, Connie.
And your family, they'll understand. People will understand. So just be honest and let them know. And even if it's your children or your spouse.
Yeah, absolutely. Yeah.
So that's tip number 3. Yeah. And there are so many other things that you should not do during this process, SaCola. What is number 4?
I think coming from a credit manager, former credit manager, now realtor, you should not use charge cards excessively or let your accounts fall behind. And look, again, buying a home is like a roller coaster ride, okay? There's moments of things that are going fast and there's that slow moment. But in that low moment, I know you are wanting to celebrate. I know that you want to, oh, I can get this. Oh, I see this. I can envision this in the house. Oh, wouldn't this be lovely? I'm going to need you to hold tight, okay? Don't use them excessively. And we're not saying that you shouldn't use your credit cards if you have them, but don't use them excessively. And then don't forget, in all the excitement of you you may find yourself a little short for closing costs. Don't let your accounts fall behind. Okay, make some form, at least a minimum payment on them, but don't let that fall behind, because if they check your credit again and they see that you're 16 days or 30 days behind, they may question you on why are you letting this account fall behind. So again, make sure you're not spending too much on your cards and make sure that you are making your payments on your accounts. It's very important to keep.
That's critical. That's an excellent point. And I think sometimes, we get busy, life happens, and you forget. And if you're not on auto draft, you may fail to make a payment. And I've seen it happen. So that is something that can definitely derail your plans and maybe end up with a denial once you've been approved.
Yes, we want approved. We want the green light. We don't want a denial or red light. Not at all. All right. So that was number 4, right, Connie? All right. So now, let's see. You should not. What's the next one that you have? What should you not do, Connie?
Okay. Womp womp. Here we are again. You should not buy any furniture. So we talked about not buying a vehicle. We talked about not excessively spending on your credit cards or falling behind. And along that same vein, we're not going to buy any furniture during this time. That's a large purchase, and it could interfere with your credit to income ratios if you hike up your balance on your credit cards during this time. So you don't want to make any large purchases, even if you have cash. You just want to steer clear of making any financial changes to your picture during this process. So I know you're excited and you want to decorate, and maybe you saw a good deal and something is on sale. So you think, oh, I need to take advantage of this sale now because it may not be on sale when I close on my home. You really don't want to make that purchase. You can always talk to your loan officer prior to making these big decisions, and they will agree and they will tell you it's really a good time just to kind of be still and let this process work its course. And when you close and you move into your home, and then you can, spend away.
Those are very good points. Yeah,
as hard as it might be.
I like those. That's a very good point, because what a lot of people may not know or understand is that you get a loan estimate of what your closing costs may be at the beginning of the process of underwriting, but it can vary and change a few percentage from the original loan estimate. So you will get another loan estimate right before you go. In North Carolina, we have what we call settlement. But when the deed is recorded, that's when you have officially closed. So when you go to the settlement table, before you do that, a few days, you're going to get another loan estimate, and the numbers may look a little different. So that's why we are discouraging you from buying furniture. Right. I know you may be excited, but just hold off and wait. And once you know what your final total is, again, just be patient. It's coming.
Right. Yes. I'm glad you brought that up. That's an excellent point, because things can change, and you get, everything is essentially an estimate, right? And we know estimates, they can be in the average range, and sometimes they might fall on the low side, or they can go to the high side. So if you go out and buy that new living room set and it's, you know, a couple of $1,000s, and there's some fluctuation in your closing costs, and you get to the settlement table and you thought you had to bring X amount of dollars, and now it's Y, and you spent those funds. So It really is a good idea just to wait. So I'm glad you brought that up. And what else should you not do during this time?
Goodness, girl. Let's see. Bam.
Oh boy, that's a good one.
You should not omit or exclude any debt or liabilities from your application. That means if you co-sign on cousin Bubba or Scooter or whoever your cousin may be years ago, you might have helped them out. And don't laugh, because I do have cousins named Bubba and Scooter, for real. But you may have helped them out.
Those names.
Right. And I'm not calling them out, but I'm just saying you might have helped Johnny or Sally back in the day. And even though they're making the payments, they're doing everything that they're supposed to be doing, please don't exclude anything. That could even be a debt that you've incurred back in college, because they're going to see that. Right. It's going to come up. Even for certain jobs, they will go all the way back in your credit history and be like, and what was this back in 19 whatever, or in the early 2000s? And you're like, oh yeah, I forgot about that. It could be a medical bill. It could be an old cell phone bill, whatever it is. Include all of your debts and liabilities. The more transparent you are and upfront with everything, that helps your process to go a little less stressful than it would be if you're having to constantly come up against roadblocks that you could have handled and taken care of yourself from the very beginning. Again, you can't control things that are beyond your scope of expertise or what you can handle, but you can control your finances. So make sure that you include all your debt or liability on your loan application.
Right. I love that you brought up the word transparency, because that is key during this time. And when you're in this process, it's just to be transparent as possible, and make sure that, you know, you're putting everything on the table and you're not leaving anything out, especially intentionally, you know. So
be truthful and honest. Yes, absolutely.
Right. Yes.
Okay. Yes. So now, Connie, what you got? You should not. What you got, girl?
Okay. So this one is a little tricky. Make large deposits. Okay. Yes. So I think we kind of can see a theme going here, right? And a lot of these, you know, should nots are around finances, not spending money, not increasing your credit usage, really activity in your banking accounts and on your credit cards. You don't want to see a lot of in and out in your checking account, because it can paint a picture that may or may not be the reality. And so in the underwriter's mind, you're making large deposits or you're making large withdrawals. They want to know why. Why are you doing this, and where did those funds come from? So if you make a large deposit that's outside of your regular paycheck, then there's going to have to be an explanation of where the funds came from. And that can open up, you know, a can of worms. And it really is just best just to kind of let things lay dormant. You don't really want a lot of activity in and out, because you don't want to have to explain and re-explain and then potentially get other people involved Where did the money come from? Who was the source? And then now that person is involved in the scenario. And then the bank wants to know, okay, well, where did they get the money and what was the source and why did they give it to you? And you can kind of see where we're going here. So it just, sets you up for having to add complexities to the situation that just shouldn't be there. So why complicate matters? Let's just kind of keep things simple and streamline and not introduce anything new into the picture. So it's like when you first apply for your loan, the lender essentially took a snapshot. You know how we like to take these selfies, right? So you took a selfie of your financial picture and you showed that selfie to the lender and you said, hey, this is what it looks like today. And so 14 days from there, 30 days, 60 days, whatever the time period is from when they made the initial credit inquiries and you completed your application until the day of closing, you really don't want that picture to change. You kind of want to keep that frozen in time. So definitely don't make any large deposits or withdrawals.
Yes. And I'm glad that you brought something up, because what a lot of people don't know is you can actually raise funds or raise money to help you with your down payment. So even if your family decides to gift you money to help you with your down payment, you will need a letter from your relatives saying that I am giving this money or I'm entrusting this amount of money, and they have to put the amount that they shared with them for the purpose of a down payment on a home. You want to keep that documentation. You want to provide that to your mortgage loan officer. Even if it's a 401k. So say, for example, you are retiring or a company has sold or what have you, and you have gotten a large lump sum of money from your 401k. You need to have documentation from that. And of course, the loan officer is going to want to verify with that company if they can, or someone, a point of contact. Is this actually where you got these funds from?
Right.
So paper trail is important. Documentation is important for you as well. I love that. Great job.
Yes. And there we go. Going back to transparency again. And you want to introduce this information to your loan officer at the very beginning. So while it may be okay in certain situations to have this activity or these large deposits, you want to let them know up front early on. So if you kind of know when you've made the decision, okay, you're gonna, take on this journey of buying a home, then you should present that at the time so they can, give you the information you need and how to properly go about doing that.
I like that.
Yeah.
Very good. All right.
Okay, so what else should we not be doing during this time, SaCola?
Ready? Bam. You should not. We're going to reiterate this, okay? We're going to beat this one too. You can't beat it anymore. Do not originate any inquiries into your credit. Simply said, guys, okay? Simply put, if anybody is asking, okay, and what is your social security number, please? As soon as you hear that question, you be like, no.
Remember?
Just say no. Look, just say no.
That's one of my favorite emojis.
No, don't do it.
Can't do it.
Stop. So that includes furniture, cars, just anything, even electronics. Even if you want that surround sound system in your house and you just getting a quote, you're not asking. And you may go into the conversation saying, I'm just trying to get a quote. As soon as they ask you for your social security number, just know that is a red flag that they are getting ready to do a soft or hard pull on your credit. And that is something that you do not want during this process. All right. So I think we got one more. That was number 9, right? So I think we got one more. So then
yes,
you should not, for this last one, you should not, Connie, what should you not do? Oh, we're on number 9 now. Co-sign.
You should not co-sign on a loan for anyone. Your mama, your daddy, your dog, no one. So Once again, here we are talking about making changes to our financial picture. Remember that selfie that we talked about? So your credit score was X at the beginning of this process, and you really want it to stay there. So you don't want to interrupt your debt to income ratio or your credit score, because doing things like this can definitely put you in the approval to denial category, right? So, and like SaCola just mentioned, co-signing on a loan, sometimes, salespeople can be a little tricky, and they can use language that might be ambiguous or vague. They're not giving you the full picture. They might say, oh, you're just co-signing, you're not going to be on the loan. Co-signing is essentially the same thing as being the person applying for the loan or taking on that debt. You're just as responsible. So it doesn't put you in a different category of responsibility. You're still responsible for that debt. It's still going to show up on your credit report, and it still will impact your debt to income ratio. So you don't want to co-sign on any loans, credit cards, nothing. So I think a good rule of thumb in all of this, we've said it, a dozen or so times, is just to kind of be still. Don't make any changes to your financial picture at all. So I think that just makes it easier. Just don't do anything. So you don't have to remember all the little things that you should not do, which they're great tips and it's fun to talk about and funny. And we like to inject some humor, but really you just want to stay still. Don't do anything at all. You go to work, get your check, let that direct deposit go in, pay your normal bills, your normal debts, your utilities, and you want to pay all of your bills on time. Every single one. You want to pay your credit cards on time. You want to pay your utilities, your cell phone bill, anything that you're obligated to on any regular basis, monthly, weekly, bi-weekly, whatever it may be, pay it on time. Of course, you're going to be buying food and groceries and personal care items and things like that. Yeah, you're still going to do those things. You might even, go out to dinner or something, but you don't want to do anything major. And speaking of major things and changes, y'all, don't go to Disney World. Don't go to Disneyland. And if you're in the Charlotte area, don't even go to Carowinds. Okay.
Why is that? Why can't we go to Carowinds and why can't we go to Disney World? My kids, my family, we deserve a vacation. Why? Why not?
You don't want to put yourself in the position to potentially spending more money than you intended or should be spending. So really, all of those things should kind of be put on the back burner until after you close on your home, because you don't want to set yourself up for temptation. And you know how we get overly generous with our family members and our children when we're in these settings, in these environments. So you might have budgeted X amount of dollars to spend while you're on this vacation or trip, and you get there and you know what, all of a sudden you're a baller, you just spending all kind of money, and that can turn into a situation that really presents challenges for you. So if you already had something on the books that you've already paid for and you planned and you have money budgeted, just let your loan officer know, right, in advance when you applied. Hey, we've already booked this cruise, we already paid for this trip, what should we do? And let them direct you and tell you what you should do and how you should handle that. But don't add anything new to the mix that wasn't already there. So don't plan a trip and pay for a trip and put down a deposit or anything like that during this time.
I'm glad that you brought that up, but I have to give a little tough love here, because you just mentioned something that's very important. You may have a trip that's already planned, or you may feel celebratory, right? Or you know how sometimes your friends or family may plan a last minute getaway or something like that. This is the point, and it's just 30 days. It's a 30-day process. Sometimes it's 45 days from the beginning. Even if you're starting your pre-approval process, and that may take 3 to 4 months, it is 3 to 4 months out of your life that we're not saying you can't live your normal regular life, but don't go above and beyond. So if there is a last minute trip or something like that, and you have not already budgeted, you don't already have a budget set aside for that, and it's showing in your account, and that loan officer may be looking at that total amount of money in that account, and they're thinking, okay, this money is supposed to go to your closing costs. and then all of a sudden that money disappears, then you're going to have to answer
Right.
these questions. Well, I went on a trip. Well, we included that amount of money for your closing costs. So how are you going to put that money back in there? So just hopefully your family and friends are understandable and say, look, we're happy to go on a road trip with you, but right now we're in the process of getting a home and applying for a real estate loan. So afterwards, honey, once I get these keys, I will go yachting, sailing, wherever you want to go.
Wherever. Yes.
Our best life, but after I get the keys.
Right.
Leads me to the last one. We do have one more. I got
Oh, do we?
Yep, I got one more.
What is that?
One more. I got one more.
How could I have forgotten?
That leads me into the last one. You ready?
I think I'm ready.
Okay, here we go. You should not.
Oh my goodness. How could I have forgotten that one?
Don't check your bank accounts. Okay. Because
here we go.
Doing pre-approval. Look, doing a pre-approval we'll do another video about the difference between pre-qualification and pre-approval. It is a difference, but just know in the pre-approval process, they're going to want your W-2s. They're going to want your most recent bank statements. And those bank statements are going to have your numbers on them. They're going to want to verify that, yes, these are your bank account numbers and also the funds. They're going to verify those funds. If you change in the middle of the game, again, that is going to delay, that is going to negate your process of closing sooner. And just remember, if you've got a seller on the other side who is looking to get money or selling their home is contingent on them buying another home, you're not only just slowing up your process, you're slowing up another person's process. So make sure you just keep the same bank accounts. Now, for whatever reason, because fraudulent things do happen, and hopefully you're working with a good bank. If something of fraudulent activity does occur on your account and you may have to withdraw that money and put it into a safer account, hopefully on your bank statements, you have other accounts just instead of just the checking account. Hopefully you may have a savings, maybe an IRA Roth account, but let your loan officer know, hey, I've had some fraudulent activity on my account. I had to transfer the money and put it into another account. And if you need to get a print off or a letter from your bank verifying that, I'm sure that they will be more than happy to work with you and you let them know why you need this letter or documentation. But please, whatever you do, do not change your bank accounts. And that is our 10 commandments of what you should not do when you're applying for a real estate loan. Hopefully these have been helpful.
And just one thing before you go, because you brought up bank accounts. So real quick, guys, I just want to say 2 additional points. Please do not have any NSF activity in your bank accounts.
That means
that is critical.
Funds.
Non-sufficient funds. And we talked about that earlier in one of the steps. But not specifically NSF funds. We just talk about spending excessively because once you have that type of activity, it is a major red flag that you're having budgeting issues and that you may not have enough income to pay for your expenses. And so if you're having trouble with daily living expenses, that's a major red flag for the underwriter. So you don't want to get any NSF. So I think the less activity that you have in your accounts in general helps prevent that. Right. And then the other thing is that there may be a reasonable explanation about why you might need to change your accounts, like SaCola mentioned. Maybe there's some fraudulent activity or something happened that warrants you changing the accounts. But when you do that, definitely discuss it with your loan officer. And also you want to make sure that the funds match, right? So when you set up these new accounts, you don't want to go from having, $10,000 in your accounts collectively or whatever the totals are. And then you open these new accounts and now suddenly you have 50,000 because they're going to want to know where that additional $40,000 came from, because that doesn't fit the story of, fraudulent activity. It's like, okay, you have fraudulent activity, but where did this money come from? So be careful, guys. And just transparency. Remember that as long as you're being transparent and upfront and honest, if you're not sure, ask, reach out to us, reach out to your real estate professional or your loan officer before you make any major decisions that impact your financial picture. So I just wanted
Absolutely.
to add that too.
No, that was a great tip. And we could go on and on.
On and
But we
on.
want to also
Yes.
empower you. We want to encourage you. We want to make sure that when you step into this game of real estate, things change consistently all the time.
Mhm.
But we just want to
Life is
empower
still
you.
moving.
Right, right. We just want to
Yeah.
empower you and give you the knowledge that you need. So that way, when you go into buying a home, it's not just about the best part of home shopping and finding the home of your dreams and how it's going to suit the lifestyle of you or your family, but also to help you prepare on the things that may pop up. You may not understand terminology, you may not understand what's happening during the process. This is why we're having real estate, real talk moments with you all. So to help you to see that there are some things, there's some processes, there are a lot of moving pieces, but the more knowledgeable you are about your process, the more less likely you're going to be taken by surprise. So I would just sum up by saying we went over these commandments with you to help you to have a stress-less transaction, because a lot of these things are things that you can avoid. So it won't cause additional headache.
Yeah.
So if you have questions for us, we're glad to help you and answer those questions. If you need to be contacted or talk to a great loan officer or a mortgage lender or even another realtor in your area, don't hesitate. Don't hesitate to send us questions. We love the questions because we can answer them and share some of that knowledge with other people as well. And now there is Splenda to take us out of the outro.
We have a special guest that she just wanted to, say good luck in your journey and call Connie. She wants to shout out her mom to let you know, as SaCola said, if you need any support, guidance, you have questions that either of us can help you with, please reach out. You can find me on my website, conniedward.com. You can find me on social media at Cake and Real Estate. So that's my handle for pretty much all of my social platforms. My social sites you can go to, you can Google that and you'll find me. But again, I service the Charlotte metro area, and that's a pretty wide area. So it's Charlotte, Mecklenburg County, and all of the surrounding counties. Yeah. So we look forward to connecting with you. And until next time, and we will always keep it real, relevant, fun, funny, and informative.
Absolutely. And I'm going to put our handles down below. So don't hesitate to reach out to us, and also put our emails down below if you want to just directly email us. All right. Yes. That's it for Real Estate Real Talk. I'm SaCola Lair again, and have a wonderful, productive day. Take care.
Bye, guys.